Good evening, everybody. Hopefully, everybody's having a good day. Markets are ripping. Before we get into it, please take a moment, pause the video, read the disclaimer. We are not financial advisors. We have no idea what your situation is. My phone is still not on vibrate. Vibrate. I'm a rookie. Please do your own due diligence. Make sure you understand what you're doing, and don't take anything we say too seriously. We're just some guys on the internet that do research. So, with that being said, do your own due diligence, and this is for educational and entertainment purposes only. Tevis, big day.
So bright, dude.
What's so bright? I turned the lights down.
No. The disclaimer. It was just like, dude, what the fuck is going on?
Dude, just because you're a vampire and you sit in the dark, I don't know what to tell you.
Yeah. And you said good evening, and it's not evening.
It's evening. It's 9 o'clock. It's evening.
It's night.
It's evening.
And you said have a good day in the market. It's not day either.
No, I said we had a good day in the market. I mean, Dow 50,000, right?
Dow 50,000. What's
Dow
the Dow
50,000.
What is it at?
It's over 50,000, right?
Is it?
It was.
It is. Dow 50,000, baby. Got to make the hats.
Listen, just saying, Dow 50,000. I've been telling everybody all week, don't worry. This is nothing to freaking go crazy about. And then the people that ran for the hills, they missed a damn good rally today. So let's start with the question that's on my mind, at least. How was the interview with Noto?
It was, I think it was very, very good. He was very forthcoming with his answers. And overall, I think it was probably one of the best, if not the best interviews that he's done. Obviously, I could be biased. Once you watch it, hopefully you'll see what I mean. But it's being well received, and hopefully we do more of them and go from there.
Good. So in full disclosure, I have not had time to watch it yet. I'm either watching it when we're done or I'm listening to it in the car tomorrow morning. So I'm very excited. I heard the first minute and a half because we listened to it on the market close for the first minute and a half and sent everybody over to listen to it. So I like what he said about the analyst because obviously Tanner started with that clip, and I think Noto's 100% correct. So I'm really excited to see what he says in it.
Yeah, I mean, we asked him questions about the capital raise, and he talked about why that's important and dispelling a couple of misconceptions about it. He talked about different product lines. He did address big business banking, and he talked about their plan in big business banking. He talked about crypto and what their advantage is there. He talked about the loan platform business expanding into home loans. And then he ultimately talked about analysts as well. So, yeah.
What did he say about business banking?
Well, let's say hi to Roy first.
Well, you're going. Roy, what's going on?
Yeah, sorry for being late. X messaging did this thing that the appearance of the Streamer League looked very different than other times. And so I was clicking on previous, and I was like, why is it showing ended? What's going on? So technology. But we were talking about that earlier, the amazing interview, which I've not watched yet. I haven't had time. Probably do that after we get finished with our stream. But the little bit I saw was good.
So business banking, what did he say? All right, Tevis isn't paying attention to us. Cool.
Business banking, you'll have to watch the interview, Stephen. He said that, it actually came as a result of their clients wanting a solution, and he thinks that they're uniquely positioned, and they're going to be focusing on that in 2026.
Okay, great. Well, I'm happy for you guys. I'm proud of you guys. I think it's going to be a great interview. I can't wait to watch it. So very excited. So where do we want to start? I mean, there's a lot of things to talk about. We had markets in shambles and then an epic rally today. We have some companies that got absolutely wiped out. One of them paying something. We got a lot of things. Amazon's 200 billion capex.
Yeah, why don't we start with why we think what happened in the market happened, and then to follow up with that, we can talk a little bit about if we think that this is a dead cat bounce with further downside or upside, and then also what we did as well. But I guess first to start, what do you guys think about the reason for the sell-off? Because I saw a lot of reasons,
Sure.
and there's a lot of contradiction.
I'll give you my take on it. So I think this started with crypto. I think a lot of people are degenerates and went on margin. I think a lot of people don't have the cash to back up their margin. And a lot of these brokerages give too much margin for people who shouldn't have it. And as it started going down, it made them have to sell equities because they had no other way to backstop their positions. And it made them force sell. And then as the market started getting impacted by it, I believe algos took a hold of it. It didn't help that the story from Anthropic got way overblown on Monday with the legal plugin, and the whole software thing happened at the same time. And it caused more people to sell into weakness. And it was a perfect storm. And I still think this is ridiculous. And the reason why the data shows to me it's ridiculous is that NVIDIA got caught up in it. And if you look what Micron, you look what SanDisk, you look at what the ancillary plays are saying about how much demand there is, and then you look at the actual AI cloud growth and AI growth from Meta, Microsoft last week, and then this week, the CapEx spend after Zuckerberg increased it by a ton. You have Alphabet come out with 180 billion, then Amazon come out with 200 billion. All roads are showing that the hardware companies are going to have a spectacular, absolutely spectacular 2026, and NVIDIA goes down to almost 170. Ridiculous. Greatest companies in the world are getting sold off, and you have companies that deserve to get hit not selling off enough. I mean, the reality is Microsoft does 160 plus billion in EBITDA. That's over $3 billion a week in EBITDA, and you're selling that off? Stop it. This is ridiculous.
Yeah, I agree with that. Forced liquidations, I think, is a real thing. Once it gets on the wrong side of the trade, it can go south in a hurry. And yeah, man, like there's just so much margin out there, and it feels structural almost. Like in crypto, you had a same thing in October. Crypto didn't really find solid footing in November, December. And now in February, you're seeing the same exact thing playing out. Obviously, there's macro effects there with the Fed chair and other macro factors of like, hey, what are rates going to be like? It's a midterm year, of course, and midterm years in general are a little bit more volatile. But ultimately, I think this could have been avoided in a big way if the margin profile didn't look as aggressive as it currently did heading into the new year.
Yeah, that accelerates things to the downside when margin is calling. It compounds and then hits the next guy and the next guy, the domino effect. I like what you said, regarding SaaS and software specifically, Steve. Like I saw Amit had a really great post on this earlier in the week, and he called out, and I remember this. I think it was it was either from a couple of weeks ago or maybe like 4 weeks ago, but it's Goldman Sachs basically coming out and talking about SaaS, software as a service, as a sector, that it has fallen to the lowest multiple let me actually pull it up, just make sure that I get it right. It's okay. The forward PE multiple for software has declined from 35 times in late 2025, which if you look at growth, maybe that's not even crazy. But yeah, it was not cheap. To 20x currently. This is from, I'd actually have to look, representing the lowest absolute level since 2014 and the smallest premium to the average S&P 500 stock since 2010. If you look at the reason for it, like AI software is going to kill AI, Claude and Anthropic are going to kill AI, not AI, software as a service. It's weird that we have that at the same time that apparently AI is a bubble and not real.
Right. I mean, how can that be? And then also, when you think about what you just said and what a lot of people were saying, arguably there'll probably be companies that don't do well or go under in SaaS. But the idea that AI is going to take out SaaS, the last time I checked, CrowdStrike is still a SaaS company. And when you really think about this, is any IT department, or let me rephrase that, is any CIO or CTO going to just make a decision because one of their workers just happened to build a security program on Claude or on ChatGPT or something? Are they really going to make a decision to get rid of CrowdStrike? Not happening. It's never even going to be a thought. Like, this whole thing is overdone.
Yeah, I think so, especially in software. Now, one of the other reasons too, you guys mentioned CapEx. If you can throw this up, Steve, just for some context, and we can add Amazon to it. So this is just showing among the 4 hyperscalers what the expectation was versus reality. You can add a lot of other, like ASML, what they're planning to spend, TSMC as well, all the memory guys, the hard drive guys, same thing. So Google came in with a significantly stronger CapEx spend than the estimate. Meta was actually fairly close, just a little bit above. They gave a range. Tesla, a lot less meaningfully so than this, but still that's a double over where it was. And then Amazon actually came out with $200 billion, which kind of spooked otherwise what was not a perfect report by any means, but yeah, these guys are, you've made this point time and time again, Steve, and I'm going to attribute you. I think maybe you were originally with this or whatever it is. I always think of you when I hear it. Who are you going to believe? Analysts that push around numbers and look at spreadsheets, not saying that they're terrible at what they're doing. Do they really understand AI and what's happening here versus some of the best and brightest business minds on the planet that understand this space intimately? These are not idiots that are spending a lot of money. Now they're stubborn. They're doubling down. They're saying the cost of missing out on this race is far more than if we, spin this for a while. But I do think there's a little bit of scare too. Just if you look at the valuation here, we saw the mixed shelf offering for Amazon, and I thought it was actually I didn't realize it came right out after earnings or during earnings. But do you think that that's maybe some of the reason why we're seeing these sell off, which is having ramifications for the broader market, just because they realize there might have to be some dilution like what Amazon's doing?
These companies are the ones that are going to build and dictate how AI is utilized. And I've said it time and time again, and I'm not backing down from this. I'm going to listen to all these CEOs before I listen to a single analyst. And think about Amazon for a sec, okay? And I've had this problem, and I've made this argument so many times. They guided in Q3 for between 21.5 and 26 billion of operating income. They continuously guide in a range because they have gotten screwed over so many times by coming in the middle of their guidance and the street taking them down. They came in at 25 billion at the top range of the guidance they provided, and it wasn't good enough because they missed by a penny on EPS. Give me a break. It is so dumb. And here's the big point. Nobody can compete with these companies. You look at the CapEx that they're spending, no other companies can compete with them. Who else is able to write a check for 200 billion, 180 billion? Alphabet's not tapping the debt markets for this. Like, this is crazy to think that people are worried that these companies are wrong. If anything, this has shown you that this is real because it's all of them. It's not one going off the reservation.
Yeah, I think that, there's a ton of companies beyond just these 4 that are building out massive things. Now, there is some like circular revenue that's happening. And there's some concerns with that, with what's happening with OpenAI. They're just not as strong as a company or as a product really as they have been in the past. I think ads is kind of showcasing that. Sam Altman had said it was like a last recourse for their type of company, and yet they're doing it. So what does that tell you? But you can see what Anthropic's doing. It's very real. It's legitimate. A lot of this capital expenditures, they're here for a reason. Will they overdo it at some point? If they continue to increase at this rate, yes, at some point they'll hit that cap. I think that my personal thoughts, and Tevis, we talked about this earlier, is that they might slow the rate of increase from here just because there has been some pushback from shareholders, some concerns, and a narrow trying to form around that. I don't think that they're moving away from that, though. And this build out is going to take years. And even when they hit that point, they're going to continue to need to build CapEx in and around these products, but the ROI should be immense.
I mean, just
So-
look at Alphabet's cash flow statement for a sec. All right,
Yeah.
let me make it a little bigger. Last year, their cash from operations grew by 24 billion, and this year that they just finished grew by 40 billion. Their cash from operations is growing quicker. Not maybe not on a percentage amount, but on a total dollar amount, it's accelerating. So all that CapEx that they're saying that they're going to spend this year, 180 billion, is probably going to be 100% fulfilled from cash from operations, because they're going to exceed 180 billion at this rate from cash from operations. So no analysts should be upset, because once again, these management teams know what the projections are of what they're going to be able to monetize these assets on. So I could give a shit about what anybody on the street thinks. I'm going by the numbers. Alphabet's got $127 billion in cash on hand with another $69 billion in long-term investments. They could write a check tomorrow for 100% of the CapEx they're going to spend in 26.
Not the 200 billion. Well, yeah, 2020. Yeah,
Yeah.
200 billion is more than 2020.
He's talking
No,
about
they're doing 180. They got 69 billion in long-term, and they have 127 in short-term. They have 100% of it covered by cash on the balance sheet.
Yeah, Roy's talking about Amazon.
Amazon's a different story.
Yeah,
I'm talking about
yeah.
Alphabet.
Okay. Yeah, I was like, I didn't see this when I was looking. Yeah, Alphabet, you're absolutely right, and they print a lot more cash. Amazon, I mean, we did talk about potential of them doing an acquisition, but it'd be a little bit weird for this type of offering. I think it's just related to the CapEx, and I mean, like, even if they have to do that for a few years, look at we don't know the amount, but my guess is it's not like a significant amount of the float. And what the ramifications if they get AI right is substantial to the upside. So I'm not an Amazon investor, but I think it's the right thing to do.
Yeah, dude, like their combined capex of just those 4 or 5 companies is over 600 billion. Like their combined capex, if you had that as a market cap, you'd be the 17th largest company in the world. Like Amazon's capex alone is bigger than Salesforce or Verizon.
It's bigger than freaking countries' GDPs.
Yeah, well, yeah, that too. So it's a big spend.
For sure. Okay. So we talked about the reason for the stock market decline. Was there any others that kind of stood out to you that as possibilities? Like we didn't talk about the Fed appointee from Trump. Do you think that's still overhang here, or?
I think we have too much access to information, and too many people go crazy over the littlest things, and everything just kind of compounded this week. So
Yeah.
I think Warsh is going to be fine. I don't think that they're putting somebody in that is going to freaking start talking to people about hiking rates. That's the last thing that's going to happen.
So, okay, I agree with you, but I do think that like if big institutions are positioned a certain way because they expect a more dovish Fed and all they're doing right now is repositioning, then that could be enough to trigger some liquidations from a margin perspective. And I think that like what you're seeing in metals as well, because you're seeing weird activity across the board. You're seeing weird activity in crypto, metals, and equities, which to me signals that like, hey, all these things are correlated by what people are holding in their portfolios, or institutions, I should say, are holding in their portfolios. So it's just a repositioning. And so the Fed pick could have been the trigger to start those dominoes.
Yeah, it did seem like the first little crack of weakness, other than like the AI isn't real, apparently, despite every indicator the other direction. And the CapEx stuff was not like brand new either. Software's been around, but yeah, that's the big catalyst, it seems like, when the momentum really shifted aggressively. Now, the other, go ahead and throw this up, Steve. I think that this is relevant. Not necessarily unemployment numbers or even inflation numbers, which were a little bit higher, I believe, last week, but the JOLTS, the job openings, came out, and this came out substantially lower than was expected by almost 700,000 people. That's a pretty big miss there. The largest, I can't remember how long, but years and years. Does this concern you? And did this well, obviously it exacerbated, but to like what scale the pullback that we experienced? Tevis?
I don't know, man. Like, I think that I didn't see it as super concerning. But I think that like we're in a market that it's just, I think I agree with Steve, like there's so much information that any one data point could be used as a justification to cause something like this. But, to my earlier point, like I think something as big as this, I lean closer to the viewpoint that it's systemic versus it's just something that can be triggered off a data point. Like there's no single data point that's big enough to trigger something that's this big. So could it have contributed? Sure. Could it have been the primary reason or something that sustains the drawdown? No, I don't think it's big enough.
Yeah, and I see increase 9896 asked, shouldn't Jolt's numbers add more fuel to the rate cuts anyway? Shouldn't that have been a positive catalyst? It depends whether we're in a good news is good news or good news is bad news type of market. And at that point, no, the markets were like, nope, Kevin Warsh is an appointee that apparently is going to do the opposite of what you expected. So they just took this as bearish. And frankly, like it is bearish ultimately. Even if there's more rate cuts, you don't want to see all the jobs right. Now, that's not what's happening. And you can get too much of a read in like a single one of these type of events. You look at the layoffs and what's happening. There's some layoffs. There's some seasonality there. It's a little bit higher. But the reason for the layoffs, like people have this narrative that AI is displacing employment. That might be a concern 3 or 4 years from now with robotics especially. But yeah, that's just too early. Like not less than 10% of the jobs, at least per companies, were attributed to AI. And usually they're quick to blame something that's like, oh, it's all this AI stuff. We can't help it. We got to compete. So, Steve, what did you think? How important is that or significant relative to the drawdown? And is this a big concern that you have, the job opening?
Yeah, I think you hit the nail on the head. I don't think it's a concern today. I think it's the start or the ongoing beginning of a systemic concern for the future because, look, we don't know. There wasn't enough information about Amazon and UPS's layoffs, if they were all seasonal workers or if they weren't. There wasn't enough data with some of these other ones. We know the layoffs are happening. That's typically normal. Layoffs happen all the time. The difference this time is a lot of people do believe that AI is going to cannibalize the job market over the next 5 to 10 years. Something is going to happen over the next year. I'm not in that camp, but I do think between robotics and AI, we have to rethink a lot of things, and this could get very ugly in 5 or 10 years from now. I don't think it's going to be an overnight thing.
Yeah.
So,
all right.
The big thing is these companies are going to increase their EPS from it. So while the job market may be screwed, corporate earnings will probably be great.
So back at you, Steve, and then we'll go Tevis. Is this dip over, or is this just a speed bump on our way down to more? Like, we can't know for sure. Again, it's not financial advice, but just what are your thoughts?
All right. The best companies in the market are too cheap. Okay. When you look at this, I always say there are always companies in markets that are expensive. There are always companies in the market that are cheap, and then some that are fairly valued. The ones that are getting hit right now are the wrong companies. I'm sorry. Meta Platforms trading at, hold on. I don't know why that happened. I apologize. Trading at 22 times this year's earnings and under 17 times. I mean, you have Amazon, Nvidia, and Meta all trading at under 17 times 2028 earnings. Microsoft at under 18 times. I don't remember a time when these 4 companies traded at that low of a forward valuation. Not a single one of these companies has less than 30% EPS growth over the next 2 years.
Well,
Alphabet, after that run, is trading at 21 times. I mean, this doesn't make any sense.
They're clearly going out of business, right?
Clearly. But you got to remember, I'm more of a long-term bull where I think that this is the craziest idea that people want to throw these companies away and not invest in them when they're going down. I bought more Microsoft today. The reality is that I want to pay for great companies at a cheaper price so I can buy more of them. This isn't money for tomorrow. This is money for the long term. And everybody continues to invest every 2 weeks that's putting capital into retirement accounts. The majority of that capital are going into these 7 companies because they're the largest holdings in index funds. And they are the strongest companies in the market, ex Tesla at the moment. But you look at the EBITDA or operating income, whatever profitability metric you want to look at for these 6, they're the biggest companies with the biggest balance sheets. They're too inexpensive. And I don't think that this is an expensive market by any means. Do I think the bottom is in? I think there's a bottom forming right now. Maybe we get a little bit down, but I still think 8,000 for this year has a good chance of happening. Because what changed from last week? Like, really, what really changed? Not a hell of a lot.
Yeah, the jolts is the main thing. A little bit more aggressive cap, but like really, the jolts is the only thing that I think is credible, and it's too early to sound the alarm. Tevis, what do you think? Is the dip over? What's happening from here?
I think Monday is going to be largely deterministic around what we can expect. We saw a pretty strong relief rally today. In the past 3 or 4 months, whenever we've seen a relief rally like this, it is generally followed by another leg lower. I wouldn't be surprised, but I think that we're closer to the turnaround than we are the beginning of this drawdown. I do think it's going to be fairly I do hope it's going to be fairly short-lived. I think that we're going to go higher in the second half of 2026 because like at the end of the day, like all this capex is positive, at least for the AI trade. I think that trade is still very much, it's in a prove it stage, but it's still very much alive. And I think if we agree that, hey, this drawdown was in large part by all these like forced liquidations, well, then that's fine. Like that's going to be, you're going to stabilize and then go back higher because fundamentally what we're seeing in earnings is these companies are beating earnings and they're doing better than we thought. And so I think that's pretty telling.
Think about everybody that was selling on Thursday. They missed one hell of a rally today. And that's why long-term money needs to stay long-term, and you're better in the market than trying to time the market, because how many days like this do you have a year? 5 to 10? You don't want to miss these rallies, because if this was the bottom, you just missed a leg up. Now, we don't know if it's the bottom, but we're going to find out in a couple of weeks. And it's just one of those things. Don't try to time the markets if you're investing in great companies. Now, if you're a trader, that's different. But if you're a long-term investor, it makes no sense to run for the hills on a string of bad days. It makes sense to buy more or just wait it out.
Yeah.
Yeah. So my perspective, like going into today, I made a video yesterday that I was talking about buying the dip on 4 different names. It's really 6 different names, but SoFi buys were last week and Palantir was small. So really just 4 credible ads. And just looking at the RSI on a lot of these, I know I don't use technicals or talk about technicals the most, but on the daily, like many of them, the tickers were as low or even lower than they were during Liberation Day, which was a far scarier event and a real significant catalyst to the downside. The weeklies, some of them were not quite to COVID lows. Some of the companies weren't public back then too that I was looking at, but a lot of the tickers like sold off like the world is ending and max fear type events. I'm like, okay, a bounce is coming. I don't know exactly when. And I don't know if that's going to be the end now. Honestly, I have no idea whether or not this is a bounce. My guess is some of those names, and we kind of saw a bit of this today, that it sold off the most aggressively, and we're down like Robinhood, more than 50%. A lot of that's crypto stuff. Some of it's warranted, some of it's not. I figured that those might have already bottomed, and even if some of the other sectors continue to sell off for a little while longer. So my guess is it's close to the end. Could be wrong. I don't think we're heading to a bear market. We're a long ways from that anyway, the indices. This also has just been a flight to safety type of event. So if you look at Apple, I don't know how it did today, but it's done quite well this year. Earnings were fine. I mean, they weren't like amazing or anything. The only thing that they're not doing is spending on CapEx for AI. And it's just classic flight to safety mentality. I think that money comes back because institutions don't want to and really can't afford to miss another V-shaped recovery like they did last year after the Liberation Day stuff. They got outperformed handily by the market, some of them for multiple years in a row, and that puts them in a scary situation. So they can't just be in the sidelines or bearish for long. They know more likely than not, like everything's intact from the bull market. Whether this was the bottom today or not, I think, that we will hit the bottom within a few weeks if we haven't already.
Yeah.
All right. So what did we do? Any moves that you made, downside protection that you bought, things that you sold out of, things that you added to?
I added more Zeta. I added more Microsoft, and I bought some more dividend stuff.
Why, out of the Mag 7, why Microsoft instead of?
Because I have a full position on Meta and NVIDIA. I am thinking about adding a little bit more NVIDIA, but it wasn't top priority considering what percentage of the portfolio it is. Microsoft, I think, is just down too much, and I wanted to own more of it. And the two that I want to focus on now is Microsoft and Amazon. But if for some reason NVIDIA gets stupid and gets down to like 160, I would stop that and I would go right into NVIDIA. But I don't think that's going to happen.
Did you buy more service now?
No, I started the position, and I don't think I said how many shares. I'm not going to, but I did start the position. I am waiting on that. I want to see what happens, because if SAS still gets clobbered and it goes down to like 80, 85, that would probably be the point where I would want to double down.
Did you add to the Nebius dip?
I think I did I did in one account, but not a lot, not enough to even talk about it.
I thought you were going to say, I think I did in my heart.
No. Not enough to even discuss it. It wasn't much.
Okay, Tevis, what about you? What moves did you make? And by the way, guys, in events like this, sometimes the right thing to do is just, say, I'm not making any moves because, emotions and everything. So don't feel compelled to make moves, make changes, especially around volatile events. But Tevis, what did you do?
I bought some more Nebius at 76, I want to say, 75. I bought some more BMNR at 20. I got put a ton of SoFi shares from my cash secured puts that I didn't want to roll out because there was no time value on them. I bought some more Amazon, and after the earnings, I sold most of my HIMs, over 50% of my HIMs, and I bought more SoFi with that money. So I bought SoFi after hours actually earlier today. And that's what I did.
Yeah, awesome. Quite the week. No aggressive put writing or anything?
Oh, I rolled out my my Nebius puts that were for February 20th. I rolled them out to end of March, I want to say, or April 17th. One of those strikes, maybe April. And I got a ton of premium, for that. Because when I rolled them out, I didn't roll them out at the 68s where it fell. I rolled them out at the 75s. I bought shares and then rolled the puts. So if we go back up in short order, then I think I can close those out way early and just I'll be fine. But if not, then I'm not worried about some liquidity crunch, basically. Getting reassigned.
So I sold PayPal out of that completely. It just complete thesis breaker. So I don't wait around when that happens. Sold it like 45 something, which it's down lower. So I'm glad I got out when I did. Even though I think it might still be undervalued, I'm just not interested. And also sold out on HIMS too today, Steve. So I'm out of two positions.
Roy, let me ask you this. At what point do the vultures come into PayPal, and at what point does a activist come in?
It's going to happen. They previously had that under Dane Schulman with Elliott Invest. They had a decently large stake. They exited a little bit before Alex Chris took over. I think that they just didn't like who they selected as a CEO. They likely had their own internal candidate. It may have been the same guy as a current CEO. Probably not, but it could be. I've not looked enough into that, and I don't want to because I'm just rearview mirror. I don't need to focus on that. Chris Patel has bought into the PayPal thesis now because it's down meaningful. And honestly, like I question it just because the guy that's brought in as a CEO, he's not going to help them innovate, grow, or anything. He might help them cost control a little bit. He's a hardware guy in charge of a software / commerce / AI business, which is just silly. Now he was on the board of directors. He knows it for a while. They print a lot of cash, but they've guided for declining revenue, declining EPS despite buybacks. Like that is not good at all.
No.
I would need to hear more about that, but I'm not going to go back to PayPal. Barring the one thing that could happen is the things that Alex Chris put in motion just took longer than expected. Advertising, I still think should be a layup. Dr. Grather is still there. PayPal World, we'll see, but if they execute on that vision, agentic commerce and so forth, I just think with the new guy, there's a lot less certainty that they continue down that road. And instead just say, we're just not a growth company anymore. We're not even going to try. We're just going to hang it up and buy back shares. And if so, I don't want that. And I honestly think if an activist investor came in, it would just accelerate that, not the build out for the future, which would be a mistake.
Yeah, I think at this point they have two options: acquire, stop the damn buybacks, figure out what the hell they can acquire and embed into that company, or go to the dividend round, just put cash back in people's pockets because the market hates the company and the buybacks have done nothing except lose value. Every share that was bought at $80 has now lost 50% of their value. It has been the worst strategy for that company.
Yeah, it's an interesting way to think about it. Honestly, man, for PayPal, I mean, Roy and I talked about this a couple of days ago. I was just like, just either take it private or spin it off, sell Venmo for a premium and sell it for parts for the rest. Because or you do some major rebrand of some sorts, but I don't see anybody stepping in to buy it. It's still fairly big. I think the best buyer is themselves.
Apple's really the only one out there that it kind of makes some sense, but I don't think that'll happen. So, yeah.
I think if they put Venmo on the table, there'd be a lot of people wanting to buy Venmo. I can think of quite a few names that could potentially want to buy Venmo. But for the rest of the legacy assets, maybe Braintree, you could argue there's definitely going to be buyers for. But for the core, flagship brand, I don't see it.
Yeah. No, I agree. So what I bought, I ended up buying SoFi through cash secured puts last Friday at $24, obviously higher than where we're at, but for the long term, I'm fine with that price. I wrote more SoFi cash secured puts for $18. Those didn't fill for this Friday. They looked like they would last night. I'm like, okay, sweet. Give me more at 18. Got some okay premiums from that though. Ended up buying a little bit of Palantir. I wrote cash secured puts on Nebius, Steve, with some of the PayPal money that I exited. And I'm like, hey, I even needed to borrow a little bit from another position, which I didn't want to, but I'm like, hey, I want to write a meaningful amount of cash secured puts. And those didn't fill. They're for $70. We were under it briefly on Thursday and, of course, went up 17, 80%. What I did when I exited HIMS, I'm like, okay, this could just run away from me. I want some Nebius now, even though it's not nearly as much as I would have had with the cash secured puts. At least I have some and I can DCA into that. So I grabbed it after hours. Not the best price, but under 90, Nebius is still cheap. Ended up buying some more VG and actually doing some call options on VG, which I haven't held any options. Haven't bought any options on anything in a long time, other than one on NVIDIA, just a tiny leap. And then I ended up buying more air test systems because I'm like, hey, this is on my 10% threshold for a minute. Let me go ahead and get that topped off. I actually a little bit overdid it because I like round numbers. And I mean, like everything this earnings season just is strengthening the air test systems thesis. And then I also added NVIDIA, just common shares, other than that one leap option. That leap option was like 2 weeks ago anyway. So, but yeah, that's what I did. All those are kind of related to what we're seeing. I have a video that I posted on this of my thoughts on the dip while I was buying these companies. But like inference is not going away. Nebius is going to do great. You guys were in Nebius before. Well, I think I was in Nebius first, but it just is a swing thing. You guys know, like it's an incredible company. It's growing. compound annual growth rate expectations are over 400% over the next 2 years. That's insane. At one point on Thursday, they had projected that they'd have $7 to $9 billion in annual recurring revenue by the end of the year, and they were trading at 2 times that. Like, what? Now, there's going to be some dilution along the way, senior convertible notes, different things like that. But that is just silly, especially given the growth and given the demand and given the quality of execution in this. So I'm like, okay, this is a strong conviction for me, more so than anything else that I haven't bought into. I'm going to get some now. So hopefully, I'd love for it to continue to fall back. There may be an opportunity even in earnings because maybe the market still hates the idea of CapEx expenditure. They'll have to accelerate that. Maybe we'll see it act like IREN, which was down like 50% at one point yesterday. VG, energy demand with AI, NVIDIA, AI, air test systems, quality control with the automated testing equipment. That testing process moving further upstream for throughput and also diminishing the cost of failure or the impact of cost of failure. So
did you guys see the interview? Because Roy, this is applicable to what you just said. I'm reading the highlights from, and they're saying that this is still the early innings of the largest industrial build out of our time. I haven't seen it yet. Did you guys watch this on halftime?
No. Who's interview?
Jensen Gerstner and
ooh.
I mean, it's a long interview. It's 21 minutes.
Oh.
I mean, I'll link it if you want.
The guy just did an hour interview with Nodos.
Well, I don't know that we want to watch the whole thing, and I haven't watched it to see parts, but reading just what they're saying,
how about
interesting?
How about we do that for after hours, and that'll be what we do on after hours. Is just we'll watch that live with our with the members, and then we'll react to it. And we can.
Tevin, you're going to be able to make it in after hours?
If it's watching Jensen, I can definitely make it in after hours.
All right, we can do that.
And let's keep this show to just an hour, so we got 18 minutes left. But yeah.
Yep. That sounds
all right.
great.
So one other question related to this: what is something that you don't have a position in right now, but looks really interesting to you?
You're going to be shocked when I say it. I'll go last.
All right. I'll go first. Wix.
Yeah.
You say Twix?
Wix.
No, not the Wix, Stephen. They own.
Hey, what do you want? A candy bar? Like, what's going on here?
Manuel pick. Manuel is definitely going to be on the stock tank to talk about it, and I cannot wait. Dude, the guy does not miss. Okay, so that's the first indication. Me and Tanner were talking about this in New York, and we're like, dude, Manuel's new pick. He doesn't miss, so it's interesting off the bat.
Yeah.
They own
a couple misses, but he's had so much success, ridiculously so. He's worth listening to every time. Yeah, just to consider.
And he's like 21, which is like I'm instantly envious. But anyways, they own Base 44. They bought Base 44 for like $80 million, and now Base 44 is doing like $80 million in like revenue. It's just insane, dude. It's the growth there, I think, and the demand is going to be really high. Not to mention that this thing is only trading for $4 billion. Dude, Base 44 alone, you could argue, could command a $4 billion valuation. And so I think it could be really interesting. They're trading at their recent lows. They haven't been this low since, since the beginning of 2025. They're trading at 2023 levels right now.
And a big buyback announced this week. There's so much things to love about this. I honestly need to do a video about this, but I want to convince Manuel to get on the stock tank first and foremost because, I need to buy some Wix or at least look into it more deeply. I think without Base 44, the core business is not something that I'm like super interested in, but with Base 44, I think that alone could command a premium here, given the rate of growth that they're having. Yeah, and Base 44, I need to learn more about it, but they're interesting. Like they're one of the software names that and ServiceNow that are of like size that are pretty interesting. I'm not going to say ServiceNow or Wixo for mine. It's just Cloudflare. It's like what they did with Claudbot, almost forgotten from 2 weeks ago. Extremely impressive where they're at. Like, there's a reason why they trade at such a premium. I just don't like the valuation, and I think that there's better opportunities. But man, I think it's a great company, so I'd love to be in it. What about for you, Steve? What's yours?
So I got two of them, and one of them I'm considering going complete dumpster diving on. And this is so out of character, and I may not do it. I'm loosely considering it. It's Oracle. I'm loosely considering it. Oracle is trading at, when you look at these damn numbers, 142.82. It's trading at a PE this year of 1852. And I know the balance sheet sucks. I know a lot of things I don't like about it. But the forward growth in 2028 from what the analysts are expecting is so huge that this thing is trading at less than 13 times 2028 earnings. And when I look at how 33 analysts are expecting that in 2028, they're expected to do 48% revenue growth. I mean, I don't think Oracle's going under by any means. I also think it's not going to do anything for a while, but this may be something that I want to start a position and add into it every month for a while as a long-term play, because this could go back to 300-400 in a couple of years. The other one's CrowdStrike, because I think the shot to the downside is so overdone on CrowdStrike when you look at the numbers for them.
Yeah, dude, like there's a lot of the cybersecurity that.
If this was at 566, this is Microsoft all over again. CrowdStrike is, yes, it's expensive. It's very expensive, but nobody is outdoing CrowdStrike in cybersecurity. Yeah. So it's getting interesting.
They're the premium player in the space. I think Rubrik's kind of interesting. It's been like too long since I've looked at these. It was like a year ago that I was looking at them more. My play in the space would just be Cloudflare. I know it's not exactly the same thing, but it is in the space. FT&T, has fallen a lot.
Fortinet's a great company.
Yeah. Rubrik as well is one that I was looking at a year ago, and I'm like, they're very interesting. I've not, even though they've stayed on my close follow list, I kind of didn't do my homework on them much over the last year, so I would need to refresh. But at least a year ago, they were great. I have not seen anything from Bulls indicates that they've weakened. Just the stock price action hasn't gone the way that they were hoping. I see some fans of SentinelOne. I mean, like that whole space, nobody's really talking about focusing on. It's sold off a lot. Some multiples are still, kind of high, but I think for a reason. I think this is a time, like if you want to in one of those spaces, to be thinking about a position. Zscaler, I see. Yeah, Zscaler. It wasn't my favorite personally, but I think it's decent.
I don't know enough about them.
Yeah, when we did our stock prediction thing mid-year, which I'm probably like dead last now because I had Oracle, I had Zscaler. I think I had CrowdStrike. I know I had Coinbase. Like just, it's terrible. Meta.
You know what's crazy? Philip Morris is targeting 5 to 7% organic net revenue growth for 2026, and PayPal can't freaking grow.
Holy crap, Roy! You're dead last.
Yeah, I figured.
Hold on, let me throw this up. What the hold on one sec, guys.
Yeah, I've not even looked. I'm like, well, I'm so far out of it. There's no reason. And that's the thing is when you're in these, like Hims was my number one pick. It's been crushed. Yep, there you go.
Wow. That's wild work. These are the picks.
Yeah. Well, the thing is with Hims, Chris, I think Neil as well, and then Tevis, you said the next round, you would have grabbed Hims too. So it's
mm-hmm. Yeah, Nebius. Neil is like the best here, which is crazy.
Yeah. Well, for Neil,
PayPal down too.
Neil covers a very broad array of names. Like these were outside of the typical bucket that I focus on. Like I know some, but I didn't know like other than like Palantir, obviously. So
Yeah, craziness.
Uber did good.
Uber did good. Yeah, it's
That's
such a diverse set of names across the board too.
Yeah.
Oh my God, Duolingo is freaking 119. This thing is down, what, 80%?
Yeah.
Yeah.
Do you think, I guess for both that and then like, do you have an opinion on Reddit too? 'Cause we talked about Reddit. Thank you, by the way, for the $2 in the question on Reddit. Is Duolingo interesting to you at any point? I know we had that stock
No.
take episode. No? Okay.
No, it's look, I'm the wrong person to ask because I hate trying to even try to speak a second language. One, two, I think that we're gonna have true translation devices in earbuds. So I just it's not anything that's interesting.
What about Reddit?
I don't know why people would use Reddit instead of X. I never used it. I don't see the appeal in it. So
Yeah,
it's not for me. It may be a great company. It's just not for me.
we were talking about like the potentiality for a target for some company that's focused around AI, just to create a walled garden effect. A lot of, and it's been a little while since I've looked at it, but SimilarWeb puts out routine updates on like traffic and then the direction referrals from these different platforms, and a lot of it goes to Reddit, and it's not locked up by like a Google like YouTube is, where a lot of the traffic goes. So it would be interesting from that perspective, but yeah, I just don't really like social media as an investment that much, even though I think there is value there from AI.
I'm just saying that between AI, like if you want to find something out, are you really going to Reddit to research something? Or is your first thing going to either Claude, ChatGPT, or Gemini or Grok?
Yeah, but Steve, you got to. So my answer when Roy asked this was the only reason Reddit would be interesting to me is if an AI company bought them out, similar to how OpenAI is rumored to be interested in Pinterest. Because you're correct. If you need information, you go to the LLMs, but the LLMs feed predominantly from Reddit. It's the number one source that trains the models. So if I am running, let's say, a small like Grok or Anthropic or any of these, I could just buy Reddit and then lock it for everybody else. And all of a sudden, I can have a competitive advantage for a relatively cheap cost.
Yeah, I agree with that. It's growing really rapidly. Cash flows look good. A lot they get revenue from advertising as well. It's in a midterm year. I just I don't really know enough about it, and I just don't particularly like social media plays. So, but could be good. It's a lot better than I thought it was when it first IPO'd. I was like, this is silly. Why are people flocking to this? And now I get it. So. All right. Steve, what do you think about Palantir?
Palantir had arguably the greatest business quarter I've ever seen from a company, not on a pure profit standpoint, just on a straight business metric standpoint. Absolutely incredible. They did not deserve to get hit. They got caught up in the murk of the market. And I am so far behind on writing. I just put out a SoFi article today, and I need to write I wish I had time to write 10 articles this weekend. I just don't.
Yeah.
I am seriously considering upgrading Palantir to bullish from neutral right now because of how incredible that quarter was. Now, broad strokes that people aren't necessarily looking at. They did close to 700 deals of $1 million or more, and their net dollar retention increased from 134 to 139%.
That was insane.
Now, none of those deals are included in that net dollar retention rate. So if you have 139% net dollar retention rate, because they do it, nothing in the trailing 12 is included in that number. So these are all over the past year. So technically now the trailing 12 is close to 700 deals of over $1 million. If you figure that those are now going to all be candidates over the next several years for a 39% increase, this is something that can outperform for several years. And I think they're sandbagging. And when I remodel where their free cash flow can get, I mean, the next 5 years look really freaking interesting.
Throw this up, please, Steve. Yeah. This right here was the standout slide. There was a lot of amazing slides, and I agree. Every single quarter, I keep saying this, and at some point it will stop being true, but it's like the greatest quarter of any company I've ever held at the time, earnings. So, smaller number of companies, but this right here, RPOs, short-term and long-term, look at the total. They jumped for $2.6 billion to $4.21 billion in a quarter. Like, that's obscene.
Crazy.
Net dollar retention, like you said, margins were absolutely just ridiculous. I mean, they continue, like the Rule of 40 score, 127%. They have an earlier slide on that. If you look at gross margins, operating margins as well, gross margins, I think, went up by almost 3 percentage points. At the same time as I want to show the guidance here. Sorry if this makes you guys dizzy. There we go. This is ridiculous guidance.
Yeah.
Not ridiculous in that I don't believe it. I think they're sandbagging, but such a beat over the expectations.
At this rate, they could hit 10 billion revenue in 27.
Yeah.
Which I didn't think was going to happen until 2029.
I think that you're right, Steve. I think that there's a very good chance of it happening. It's not guaranteed here, but with what's happening, with how it's playing out in the meta, the demand for the product, a lot of companies are now exiting projects that did not work for AI, while their competitors did quite well with Palantir, maybe some other products as well. Like, there are competitors, but at this point, a lot of companies are realizing, like, if they're behind, that they need something that actually works so that they can catch up or at least maintain. And those that are ahead are realizing Palantir works across their entire freaking enterprise, like HD Hyundai, one of the fastest growing companies in the region out there, is now using Palantir across their entire ecosystem. It's just the Palantir thesis playing out again and again. So,
well, look at this. So I haven't finished updating everything. I only updated 2 slides because these are the 2 I truly care about. So start with total customer count, then we'll get to the deals. Everybody said it was a black box except for a couple of us back here. Back here, a couple of us said it wasn't. You guys don't know what you're talking about. And look at the blue bars. Look at the S curve in commercial customer count up to 780. Total customers 954. And when you look at the deals, this is truly incredible. 139, 157, 204, and 180. 650 to 700 deals of $1 million or more over the trailing 12 months now. You have roughly 180 of them being over $10 million. These are big deals. This is a company that very easily could go back to 200. It could also go under 100. I think it's a lot harder for it to go under 100 now. And I am probably the most critical of Palantir, of their shareholders, or one of them. And I no longer think it's going under 100. And I think that's a pretty big statement for how much I've said. I think it can really go under 100.
Oh, yeah. Yeah. I mean, like, and it could. Like, there's always a chance, right? Caught up in the
middle. It could. I just don't think it's going to anymore.
It's hard because there's a lot of buyers, including us. Like, that's one of the things I did in my mind is like, okay, all these stocks are selling off. Palantir just did what they did. I added a little bit. It was not a meaningful buy. It's kind of like what you said with one of their positions. But I looked at Palantir and I'm like, okay, I don't think this is going to happen. But if it gets to just above $100, so I was like 105, 101, whatever. I'm not going to wait for 100. I'm not going to wait for it to break below the psychological level there. I will add a meaningful amount of Palantir. The only way I can do that is margin, which I wouldn't be comfortable with there, or exiting some other positions, or really just trimming a lot of other positions to get the Palantir back to the sizing I want. The multiple still looks, not cheap there. And we could absolutely still, like, it's 137.65. I want more Palantir there. Anything can happen over the short term. I think it's pretty clear what's happening over the next 5 years.
Yeah, I mean, this is a company that I think is going to do very, very well. And the numbers are making it look much less expensive than it looked last week. Obviously, going down a little bit more helped the valuation a lot, especially with the increased guidance. But this does not look like a nosebleed company anymore. And when you think about holding something for 5 years, this is something that's going to look really inexpensive in like 2 or 3 years from now. I still don't think it's going to be $1 trillion company in the next 2 or 3 years. I do think it's making all-time highs though over that period.
Yeah. Yeah. And like if we fall down further, I would just be buying shares. Like cheap can get cheaper. Well, it still wouldn't be cheap there. So I'm not saying that. But I'm just saying the stock price can keep falling in the current macro. You know, at a certain point, I'll start getting options and leaps. I haven't owned them for a long, long time in Palantir. Kind of wish I did because I would have made more money on the upside. But yeah, I just need to own more. So
yeah,
but like
it.
It's so hard though. Like when you go back to the Mag 7 stuff, like the Meta is cheap. I'm not going to buy Meta, but Nvidia is stupidly cheap. I'm going to buy Nvidia versus like where Palantir's at. It's like it's hard, man. You only have so much money. So like, where do you actually split it? I need more Nvidia. So I don't know.
Nvidia at these levels is so inexpensive.
Yeah.
I mean, Tevis, would you be buying more Nvidia here? I think you're an Nvidia shareholder, right?
No, not yet. Once my cash secured puts get hit, though, I will be.
He's been too busy buying air test systems.
I don't own Nvidia, but like Nebius is my second largest position, so I'm bullish on the trade. But yeah, I have cash secured puts on Nvidia, and I hope they get hit. But I'll have to wait a little bit for that in case they do or not.
All right.
Yeah, I mean, the market's in an interesting place right now.
Yeah.
So why don't we do this? Let's plug two things. Tevis, why don't we plug your interview with Noto will be on your channel tomorrow at what time?
Likely around 5 p.m.
Okay.
Tanner wanted a 24-hour head start on YouTube, and I got a 24-hour head start on Twitter. So
Gotcha.
Tomorrow at 5 p.m. we're going to flip. So Tanner's going to post on his Twitter for that interview. I'm going to post on my channel, so you guys can watch it on YouTube, and we can have it in our library.
Wonderful. Please go subscribe to Roy, subscribe to Tevis, and please watch his interview with Noto. I'm probably going to do it tonight at this point. And then Amit and I started a new channel. I'm linking it in the chat here. It's called Basis Points. And our first interview was with Josh Brown. It is live right now. So please go subscribe and watch that also. And I'm excited for everybody to see that and the Noto interview. I mean, the small portion I saw of the Noto one was awesome, and I'm super excited to watch that.
Yeah, absolutely. I'm going to have to watch it tonight too.
All right. So I put the link for the after hours in the private chat. If you are a member of Tevis, Roy, or my channel, you'll be able to see it live. So give us like 5 minutes and we'll start that one. And if we don't talk to you, enjoy the weekend. If you're in the Northeast, it's going to get some snow, so stock up and enjoy. If you're in Canada, I'm sure you're going to be freezing, so stock up and enjoy. And we'll see you later. Thank you for joining. We really appreciate it, everyone.
Thanks, everybody.
All right. See everyone in the after hours.